and welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I am Yatin Mota.
Well, Yatin, a very good Monday, marvelous Monday, so to say, given the fact that the Nifty has clocked in a triple-digit rally. So from 18,500 to 18,600 in just one session.
Correct.
Given the fact that we saw quite a bit of volatility for Nifty to come to 18,500 from 18,300. But of course, what was the big news today was the fact that Nifty Bank hit a fresh record, coming very close to that 18,000, in fact 44,500 mark, I beg your pardon. But it took 113 sessions for the Nifty Bank index to hit a fresh record. Aside of that, you had quite a few sectors doing well. The metals pack, you had the auto pack, the banks, of course, FMCG basket, all these sectors doing well. Realty was also among the top sectoral movers in today's session. But IT and energy sectors towards the end of the day were emerging as the top laggards. Of course, energy pack was being weighed down by ONGC that had seen a fairly weak quarter on the back of a one-time hit on its earnings. So that stock was not doing well. Aside of that, Power Grid, HCL Tech, Divi's Lab were among the top Nifty losers in today's session. If you look at the gainers, M&M, nearly 5%, that was the day's high for M&M on the back of, good set of numbers, good commentary coming in from the management. Brokerage is also maintaining a positive view on the stock. So that was the top gainer. Titan, Coal India, Tata Steel, SBI were among the other heavyweights. In fact, RIL was also participating in today's rally. Well, mid and small cap indices were also holding up, showing strength. But there were quite a few movers in the mid cap space as usual that were reacting to earnings and news flow. I think you want to talk about some of them.
So, if you look at the mid cap end of the market, quite active. In fact, both the mid cap indices, small cap and the mid cap were up nearly 0.5% or so. If you look at the trade today, Inox Wind, the top gainer, almost 15% up for that one. Mahindra Life, 8% up. ICICI Lombard, Engineers India, as well as BHEL were the other gainers as far as Nifty 500 is concerned. Losing side, we had GMR Infra. Numbers disappointed big time. Post with the stock was down 10%. City Union Bank and Balkrishna Industries also, because of the FNO positioning or the results, whatever you may say, both of these stocks were down nearly 8%. So a lot of result reaction, Nandita, and probably we are ending the result season very, very shortly. A few numbers here and there, and probably by 1st June, we'll be done with most of them.
Yeah, Yatin, you're right. This week, at least, we'll see a barrage of mid-cap and small-cap earnings. So, we'll, of course, be keeping an eye on that. But let's now take a look at the top stocks that are on our radar this afternoon. Not really reacting to numbers, but news flow. That's ICICI Lombard for you. That stock ended higher by about 8%. At one point in time, it was up somewhere around 12% or thereabouts. It is reacting to news flow that ICICI Bank will be increasing its stake in the counter from 48% to 52%. And out of that 4%, 2.5% stake will be increased by September 2024. Now, there's a catch here, Yatin. Earlier, ICICI Bank was looking to decrease its stake to 30%. Let me tell our viewers that in any insurance venture, a bank can either hold less than 30% stake or more than 50% stake. So here ICICI Bank had a 48% stake, and that stake had come down to 48% after ICICI Lombard's merger with Bharti AXA. Yes. And earlier obviously it had a plan to pare its stake below 30%, and it had also got the RBI's approval to do so by September 2024. But now there's a change in plan. It is going to extend, in fact, increase its stake. As I mentioned, 2.5% stake will be increased by September 2024, and the rest of the stake later. But if you look at what the brokerages are saying, Motilal Oswal believed that this stake of ICICI Bank was a major overhang for ICICI Lombard, and now this overhang is out of the way. So it has pegged a target of somewhere around 1400 rupees or thereabouts when it comes to the stock. If you look at the stock PE, it is at around 33x. Okay. Motilal Oswal is saying that it has seen quite a big derating ever since this merger happened. So from 55x it came down to 33x. But even now it is very expensive if you look at the sector PE. And when you look at what market men are saying, market veteran Saurabh Mukherjee is saying that ICICI Lombard is a value, in fact a very quality stock that one must hold and wait for the valuation to crystallize basically going forward. So it's a quality stock, one overhang out of the way. We saw an 8% rally. Looks like there is more upside on this stock going forward.
Yeah, and ICICI Bank clearly, if they increase the stake anytime soon, then there will be a fillip to the share price as well. But shifting gears to auto sector, and Mahindra & Mahindra was the top Nifty gainer today. Simple reason being earnings were good and the management commentary was good, especially with the tractor segment, wherein the management is expecting to increase market share. More importantly, the CEO also spoke about how really they will go about the non-core assets. So, if they have identified 10 to 15 billion dollars worth of non-core assets, and if they are able to divest that, then there could be some serious upside to the overall valuation for this. CLSA has raised the target on Mahindra & Mahindra to 1700, almost 100 rupees from the previous target price. They do believe that the Mahindra & Mahindra SUV segment should do well, and they will be able to maintain a market share above 20%, and that is one sector and segment which is doing really well for Mahindras. Also, the El Nino concerns regarding the tractor sales are overdone, and probably the brokerage believes that from here on, given the management commentary is strong, the tractor volumes also should be incrementally better than what it was anticipated due to the El Nino effect. So, clearly, when it comes to Mahindra & Mahindra, good quality earnings, good brokerage upgrades, as well as the management commentary also sounding quite decent.
Right, the stock has also outperformed its peers over the last 1 year, and if you look at the price to earnings ratio, it is much lower compared to the sector PE.
Yeah.
But one interesting fact is that domestic mutual funds have pared their stake by a little in the last quarter. Well, let's also take a look at the other stock that's on my list. It's BHEL. Operationally the quarter was very weak. Profit has taken a hit. In fact, even margins were lower. But the stock is up. Interesting part is that the management believes that the outlook for power sector is pretty buoyant going forward, which is why I think the stock is in the positive. Interesting to note that CLSA has a sell rating on the stock. Target price has been increased marginally, but the target price by analysts ranges from 34 rupees to 85 rupees. So, it's a wide range.
Yeah.
But the main fact as to why brokerages are a little cautious on this stock is the fact that it is diversifying away from its key segment, which is power sector, and it's going into railways, defense,
Correct.
nuclear power. So, in the long term, all this bodes well, but for the near term, the path to profitability becomes more hazy. That's what brokerages are saying, and which is why they are a little cautious. And also the fact that execution has been weak, and when it comes to thermal orders, there has been a delay. So these things, according to brokerages, don't really bode very well, and there are very less near-term catalysts for the stock going forward. If you look at the PE ratio, it's at 60x, I think.
Okay.
That's higher than its sector PE, and over the last 1 year, the stock has rallied 60%. So that way stock looks expensive, and but one fact is that both DIIs and foreign investors have increased their stake in the last quarter. But we'll have to see how all the things that the brokerages are mentioning bodes for the stock going forward. But according to them, the near-term path to profitability is a little hazy.
But I think CLSA always has been negative on the stock in terms of the rating, and they haven't been able to really get the stock down, if I may say so, because Antique on the other hand has a buy rating on BHEL with a target of 100 rupees, because they do believe that the power sector provides multiple leg of growth to the business moving ahead. 50% of revenues are expected to come in from the power segment moving forward, and if they're able to get better margins there, which the management spoke about, probably market was excited with that particular piece, and despite the sell rating of CLSA and whatever were the results, the stock moved nearly 5% on the back of good outlook with the management gave with respect to the power sector. That's about BHEL, but let's move a bit forward to the pharma sector, wherein Aurobindo Pharma reported a good set of earnings, wherein Investec also has a buy rating on this one with a target price of 560. Obviously, the stock was under pressure, but it has also already run up in the anticipation of good earnings. If you look at Investec, they do believe that US business remains strong. Margin improvement has driven the minor EBITDA beat, but if you look at the non-US sales, they have disappointed a bit. ARV sales also continue to remain weak, and as far as other businesses are concerned, they also remain in line. So we have Investec, which is a buy rating, as I mentioned earlier, with a target price of 560. And in general, we are looking at some traction gradually for the pharma companies with respect to the US business. You look at Divi's Labs, the commentary given by Sun Pharma, Zydus, and now Aurobindo. Probably there is some pricing pressure, agreed about that, but I think all the pressures are gradually easing, and if raw material prices come down, probably we could see some improvement in the pharma industry's overall gross margins.
Right, with respect to Aurobindo, the return ratios haven't really been that healthy, Yatin. And, it has been bagging a lot of USFDA approvals for its drugs in the recent past. But anything with respect to, USFDA issues with respect to its API plant or any issues going forward? Because we've seen Sun facing issues on the
So
Halol
I
front.
think that's the reality with all these pharma companies, that one of their plants probably is under official action initiated status, or has a import alert, or has a warning letter. That's I think probably a routine thing
Yeah,
to
for
deal
pharma
with the
companies
regulator.
now, yeah.
But yes, there have been issues, and most of the pharma companies do face some issues in some form or the other. But I think in general, the Indian generic business to the US has been quite strong. In fact, US pharma, I don't imagine that sector without Indian suppliers. So we are quite dominant with respect to the US business and the way we export to the US markets. That has been buoyant. But yes, there are always tailwinds and headwinds in this sector, in either the regulatory form or in the pricing front, or there is some US legislator who probably objects to high drug prices. So yes, there has been multiple headwinds in the recent past, but now I think a lot of tailwinds to the margins, given the fact that raw material prices have been coming down.
Right. Well, so those were the stocks on our radar. Yatin, just 1.5% away from life highs. Hopefully, we'll have to see whether we manage to reclaim those record highs this week itself. But for now, on this good note, we would like to take your leave. Thanks a lot for watching. But of course, if you have any comments, let us know in the comment section below. And of course, keep following Moneycontrol for all your news and other updates. But for now, it's a goodbye from me and Yatin. I'll be back at 8:30 AM tomorrow morning with all the market action. Thanks a lot for watching.